Hey, good morning. Let's go over today's trade plan. So overnight, ES remained quite balanced within the lower part of yesterday's range, and heading into the open, our short-term bias is very neutral. Now, yesterday was the first time that we saw a little bit of weakness in the market where ES broke below the recent two-day balance, but bigger picture, the buy side is still dominant and in control, and the larger time frame bias continues to be bullish. So off the open, we're going to be watching to see which way this range can really resolve, the overnight range here. We have initial support 77.75 to 79.75, initial resistance 87.5 to 89.5, and whichever way the market breaks is going to tell us which side is being dominant on the smaller time frames. But like I said, the larger time frame bias continues to be bullish. So even if we break down below 77.75 to 79.75, responsive buyers can still step in at the support zones below. Now, immediately below, we have support at 74.5 to 76, and that's a zone where we need to assess the market in real time and just see how the market's breaking down in the event that we break down. So, are we breaking down on very heavy momentum and stronger volume, or is the breakdown more likely to be a false breakdown? Because given the larger time frame bullish bias, that scenario is very possible where ES attempts to break down but then hits support and turns back around and starts heading back up into the overnight range. So 74.5 to 76 is a zone that calls for some discretion, and we'll just have to assess the situation in real time. 69.5 to 71.5, and especially 64 to 66.5 are zones where responsive buyers are very likely to be active, especially the 64 to 66.5. That's a very high odds zone where responsive buyers are likely to be active. And in the event of some very strong selling, 57.5 to 59.5 would be the final zone where responsive buyers can still step in. But ideally, we don't want to see that deep of a pullback in the S&P. So ideally, either the market holds initial support and then breaks out to the upside and goes back up to test 92, 93, and 96 to 98.5, or even if we break below initial support, we find responsive buyers at the 74.5 to 76, or 69.5 to 71.5, or worst case scenario, 64 to 66.5. So unless it's a trend down day, which is not the expectation, 64 to 66.5 is a automatic long setup for the most part. So we'll just have to assess the market off the open, kind of see how it's developing, but just keep in mind that the bigger picture is still bullish. Short term, sell side was a bit more dominant yesterday, so that leads to a fairly neutral short-term bias. But the larger time frame bias is still bullish, and when the market gets exhausted into a good support zone, then that can still be a area that provides a pretty decent reaction and possibly even a reversal on the day time frame. Considering that we don't really have any major econ reports due today, the expectation is for the market to be fairly balanced. So whether it breaks down below initial support or breaks out above initial resistance, the other side can still step in at the zones above and below. So above 87.5 to 89.5, we have resistance at 92 to 93. That's an area, again, we'll have to be a little bit more careful because it's immediately above the overnight high. And if we're breaking out on strong volume and momentum, then 92, 93 calls for caution. 96 to 98.5 marks yesterday's high, and it's still an area where responsive sellers can be active, and we can still get a response on the day time frame. Beyond that, we have resistance at 2101.75 and 03 quarter to 05 quarter, which again are spots where the sell side can step in. So overall, the expectation is for the market to continue to be fairly balanced and range bound, irrespective of which way it breaks from the overnight range. Short term, like I said, the directional bias is going to be neutral, and off the open, we are going to have to assess the situation in real time to see how the other markets are shaping up, how the internals look, how the momentum looks, and then determine if there is a good trade setup available off the open. Are we getting good enough trade location to justify a trade? And if we're not, then it's going to be better to be patient. This environment lately, as the market has been testing and breaking and messing around with the all-time highs, has been a more challenging environment. And to deal with that, the best way is to just be a little bit more selective and trade less. And if you're not getting the trade you want, if you're not getting the location you want, the timing you want, then skip it and wait for the next ideal trade. This is not the environment where you want to be chasing trades. It's never really a good idea to chase trades, but when volatility dies down and volume dies down, that's especially going to be a dangerous move. When you're trading in a high volatility environment with big ranges, then you can get away with chasing a little bit. But when the volatility situation is the way it is these days, where the ranges are not extremely big and the intraday volatility is relatively low, then you want to be extra selective and extra careful, especially given today that it's a Friday and we're heading into the weekend. You want to be fairly selective on a day like today. So if that means missing the trade and not getting it, then that should be okay. That should be accepted. So those are the main thoughts heading into the open. Let's see, which side really steps in. The bias is very neutral here, so we're open to a move in either direction. But in the event that we do break down, we'll be looking for long setups at the support zones below. 64.66 being a very high odd zone, but even 69.5 to 71.5 is an area where responsive buyers can be active, and perhaps even 74.5 to 76, depending on how we get there. So those are our main thoughts. Let's see which side really takes over here off the open, and we'll take it from there.